Good morning and happy Friday. It is February 24th, and we are finally seeing some violent downside into the forecasted low in early March that I've been talking about since December. I'm trying out a new format with these podcasts without video. Some people will appreciate it because, you can listen to podcasts while you're doing other household chores, driving. A podcast isn't quite as demanding as a YouTube video where you have to actually sit down and watch a video. Whereas a podcast you can pretty much do or go about your day and listen at your leisure. So I'm trying out this new format. Let me know how you like it. I'll upload it to YouTube so you can leave some comments, but there won't be any video associated with this update. So for now, you'll have to settle for me and what I'm seeing in the charts. But as always, follow me on Twitter. I'm posting screenshots with the updated forecast almost every day, so you'll never miss an update as long as you follow me over there. Okay, so what are we seeing? Well, so far this year we got that sharp pop-up in early January. I sold the top of that rally and then immediately took out some puts and took some profits on them because we got that sharp drop later into January. Since then, we popped back up and we've been kind of chopping around all February, and it looks like around February 14th, we hit the top of a range, and instead of testing the bottom of that range and bouncing back up onto February 21st, we collapsed right through that range, and we are continuing to collapse into today. This shouldn't be unexpected, as we've been talking about the low in March all year. However, I did think we would bounce off that range and get a squeeze up to a high, that high being this week sometime, but we didn't see that. But the risk was there, so I'm glad I didn't hold those puts trying to anticipate this plunge. Because I thought the Dow would have a few more percent upside around the 21st, but now here we are at the 24th and it's continuing to collapse, so that tells me that we potentially have a decent amount of downside into the first week of March. Or we could bounce after this weekend and just chop around sideways until we start to see the market heading higher. I do want to point out that volatility has been suppressed for about 2.5 months now. The VIX hit an 18 handle in early December. And since then, it's been chopping around and grinding lower to a low about 17. And now VIX is up at 22, and it looks like it's climbing higher. And I would expect the VIX to at least head up to 27 or possibly the 33 level. Now, if we were to hit the 33 level, that would be about 2 standard deviations away from the 100-day moving average. 2 standard deviations is an important level. That's about the level that the VIX tags at important market bottoms. And as of today, it has been months since we've hit 2 standard deviations to the upside on the VIX. So the VIX has really been suppressed for quite some time now. For reference, the last time the VIX went this long without testing the 2 standard deviation mark on the upside was September of 2020. But keep in mind that in 2020 we had a massive spike in volatility with the VIX up to a level of 84. Now obviously that was the buying opportunity of a lifetime right there, now that we know what happened. But it was awfully hard to see while you were in it. At that time, everyone was so crazy about this virus that they weren't even thinking about their investments, but that was the buying opportunity of a lifetime right there. So the VIX not having tested the 2 standard deviation mark in this long, that tells me we are long overdue for some major volatility. And what I see is the momentum of the VIX starting to really gain strength to the upside. So I think there's a possibility that this March low is very scary. We could have a very sharp drop coming over the next week or two. And if we revisit my forecast for this year, I wouldn't have suspected that we would go deeply negative on the year. So as we stand today, we're about 1% down on the Dow for the year. And that is about as low as the forecast models had predicted. However, like I said when I made these forecast models in December, they are often more accurate directionally than in magnitude. So take the levels on these forecasts with a grain of salt. We can use them mainly for identifying major market pivot points. And I truly believe that time is much more important than price in trading. A lot of traders will focus so much attention on price levels, levels of resistance of support, levels of high volume, gaps with low volume. To the contrary, I think market structure will give you a great idea as to the underlying trend. But when the market finally hits that pivot point to the downside, it's not going to care what price level that is. The market cares that it's time to move up now, and it'll find buyers when they're ready. To illustrate my point, let's look at the chart of Bitcoin. Now, we bottomed around 15,500 back in mid-November. There was absolutely nothing important about that price. 15,500. If you were completely hell-bent on market structure at finding a level of support, you would have been waiting until the price hit 13,800. That's because that was about where the peak was in June of 2019. And that was realistically the next level of support for Bitcoin, but it never hit that. And keep in mind as well, it fell right through the level of 20,000, which was the peak in 2018. That should have been a very strong level of support. However, back in June of 2022, we sliced right through that level like butter. And then we came back up, had a nice bounce, and then collapsed below it once again. It didn't respect that level at all. So what was so special about the 15,500 level? The point I'm trying to make here is that there was absolutely nothing special about that level whatsoever. But what is significant is the time that it made that low, November 22nd, 2022. That is almost exactly a year after the Bitcoin peak at 69,000 on the 10th of November 2021. Almost exactly a year. And what I've been saying about Bitcoin's 4-year cycle, you have 3 years to the upside followed by 1 year of downside. And that's exactly how it's been working. So that's what I was pounding the table about back in November, saying that this is the bottom. It doesn't matter if you're still waiting for 13,800, or maybe some people were calling for 10,000 or all these crazy price targets to the downside. It's not happening. Bitcoin has obviously regained a bullish trend. Now, that doesn't mean that we can't come down and test 20,000 again. In fact, 20,000, it would not surprise me at all, even 19,500, which was the peak in December of 2017. That would be an important level to test. So if we see Bitcoin come down to 19,500 in the first week of March, or the second week maybe, that is a huge buying opportunity. And if you were to see that happen and you see a strong bounce in Bitcoin from that level, you know that the market is, in general, is not far behind. Because Bitcoin is often a leading indicator of risk. So if people are willing to risk their money in Bitcoin, they're willing to risk their money in the stock market in general. Bitcoin is one asset you should keep an eye on. So, based on what I'm seeing in Bitcoin and in volatility, it shouldn't be surprising that we see a good deal more downside in the Dow into early March. And the first place I'll be looking is the VIX to make a nice spike up to that 2 standard deviation level. Now at this point, I wouldn't go ahead and buy some more put options expecting the downside to occur because, as I mentioned, we have regained a bullish underlying trend, and it's very dangerous to short the market in an uptrend. So what do we do now? Well, I'm just going to wait patiently and watch these charts like a hawk. And when we get there, you bet I'll be talking about it. I'll be pounding the table once again like I was back in October, that the low is in. I don't know about you guys, but I'm excited. I got some cash ready to deploy, and we are ready to put it to work. And next week, I'll be in Mexico in Puerto Vallarta with my wife, soaking up some sun, gorging on some delicious Mexican food, and sipping some top-shelf tequila on the beach. I can't wait. It's about 85 degrees down there, and up here in Massachusetts, it's about 35, so I'm ready to bounce. So whether I do any podcasts or videos next week, I doubt it. But I'm sure I'll have some time to post some charts on Twitter, so make sure you follow me over there. That'll wrap it up for this week's update. I hope you guys enjoyed the podcast format. Until next time, adios.